Alright traders, welcome back to another price action training lesson. Today's session started with bearish trend down, and now we have overshoot, the break of the trend channel line, which means we can expect stronger pullback in the opposite direction, and overshoot can sometimes even lead to potential reversal. However, we're also breaking the trend line, and our first initial thinking process is to expect new low for this downtrend. This was quite a significant push down. So as you can see, market is correcting, and we have broad visual two-leg pullback that triggered below bullish bar. We cannot sell. Remember, we are sellers. The single bar is integral part of the setup. So you need to sell below bearish bars only. And this is a full bullish bar, so I cannot go short here. And now we have mini count reset. First entry short, second entry short. As you can see, you're still above the exponential moving average. And this is a little bit worried because you have to ask yourself, hold on, why are we back above the EMA? Is overshoot generating the stronger pullback? So for this reason, we can't really go short just yet. We need to see that break below the EMA, and I want to see a lower high confirmation that's going to confirm the fact that we're going to get the new extreme and it's going to clear the structure up. Okay, so when you're not sure, you're waiting for the confirmation setup. It looks like we may get the new extreme, but notice what happened. Okay, and this is changing things. Okay, why are we breaking back above the EMA? You can see consistent series of high highs and high lows. So now I definitely pause looking to sell, and I'm going to be patiently observing price action. I still cannot go long because the downtrend was the prevalent pattern. But as I can see market continuing to work high like this, I have to ask myself, hold on, what's going on? And I need to adapt because there is right now a broader channel being present. As you can see, if I'm going to connect all of these swings, market geometry if it's well, and we retrace too far up, combined with the overshoot, that this downtrend, we're no longer expecting new extreme, we're going to adapt to a brand new structure. Sometimes it can happen, overshoot can reverse the market 8 or 9 times out of 10. We're going to get the new extreme tested, but it's important when you see overshoot to treat the market accordingly because there can be stronger pullbacks. Right now, the bias shifted into bullish bias, and as price action traders, you want to see the two-legged pullback at the EMA. Market keeps working higher. No two-legged pullback so far. Now we have two-legged pullback, but notice the signal bar, horrible doji. Now, had this been better bar, I actually would have liked going long here, but this is doji below EMA. I need to see some better bar. So at this point, I'm waiting for a high-low confirmation setup above the exponential moving average or potential double trap, and there was no high-low above EMA, so I'm waiting. Now, had there been much stronger bullish bar, I definitely would have taken this and probably would have got trapped. Although you can also consider with stronger bullish bar here, the bullish momentum would have been stronger and the push phase would have started. So remember, horrible signal bar again, you waited. However, downtrend still played out with the break and the new extreme. We're pushing above EMA, and this uptrend needs to get new high tested. So I still expect new high. So I want to see a high low above EMA, can get a high low confirmation setup. No high low, and uptrend created the break and the new extreme. So I'm pausing, looking to go long, and market keeps working higher back to the important key level. Why is this an important key level? Well, as you can see, this is the high of the day important key level, the low of the day important key level, and this resembles a big trend range. Massive leg down, followed by a massive leg to the upside. Now, when I'm watching this, this looks like a one leg break, second leg. As you can see, one push up, break, second push up. And because you're bouncing off the important resistance key level, I'm not too excited to widen the channel just yet, because if I'm going to widen it, as you can see, I'm not getting confirmations here at all. And I don't have confirmations here. I only have this swing right here, which is not a lot of confirmations. And here's the major point. If I'm going to widen it, I still end up with potential overshoot. So at first, I don't really like the wider channel. But even if I accept the fact there may be potential wider uptrend, it still has overshoot, which doesn't really help me. So because this is a big trend range and we are bouncing off the high of the day, I'm leaning more towards this being a break, move to a new extreme. So let's see what's going to happen. Market is correcting, and now we have lower high confirmation setup. Now this is a little bit more advanced setup, but because you're confirming the bounce off the resistance, more advanced trader can consider decent lower high. You're so far from the EMA, market is most likely going to pull back. Okay, now you have a new high for the central long, second entry long. They're very tempting. But at this point, it is looking quite bullish again. So we need to see the push below EMA. And once again, finally, we can see market trending lower. So right now what I have to do, adapt to the reversal. The resistance held, sellers stepped into the market around this price level. Now this failed second entry long was quite tempting when you're watching this live. I'm thinking about marking this way more aggressive. You know, more aggressive trader can consider, but it is safer always to wait for the push below EMA reversal pattern, which you get a failed second entry long here, but it is so far from the EMA you cannot take. It is so far down. I have to redraw a brand new spike down channel pattern. We have mini overshoot as well. We have a new low first entry short. Now we're breaking above EMA, which is not a good sign for bears. At this point, I was not sure what the bias exactly is, because is there a bigger, wider uptrend, or are we going to reverse down? I was thinking bearish because resistance held, we push below EMA, but why are we now back above the EMA? You have to ask yourself, why is the EMA not rejecting? And we had overshoot, so there can be stronger pullback. So once again, after overshoot, we have to skip the very first second entry. You need to see the lower high confirmation setup. Can I get a lower high confirmation setup? I cannot. We have a break, move to a new extreme. And this is very close to being potential double trap. But once again, technical double trap needs to close below the EMA. And as you can see, you're still one tick above EMA, which is not ideal. Not ideal, you know. For double trap to be considered double trap, you really like to see the close below EMA, so I don't think we can take it. It is tempting, but unfortunately, we didn't fully close below the EMA. We created micro double bottom. Market is going sideways. At this point, it looks like the downtrend played out because you're very close to creating the new low, one tick away from it, so I cannot really sell anymore. At the same time, I cannot go long because you can see you're trending lower, you're below EMA. Now you have failed breakout out of the congestion, because most breakouts out of these congestions will fail, which means you can fade it. Problem is, notice we almost made the new extreme. We are one tick away, so you can't really trust it with confidence. Had we made low that is much higher, so you have still room to create new extreme, you could have considered. But when I see breaking new extreme almost double bottom, it's really hard to be thinking about selling again. Market keeps breaking lower, okay. And market momentum is getting stronger and stronger to the downside. So I'm going to redraw a brand new structure like this. I definitely cannot go long because, as you can see, there is no static key level. In fact, every single major high is lower and lower. So there's a case to be made for potential wider downtrend like this. Why I'm thinking about widening the downtrend? Well, because notice what happened here. This was a massive leg down. And every single major high and low is lower and lower. Now, this downtrend is a little bit too flat. It is not the greatest downtrend, but let's see what's going to happen. Okay, we have a break in new high, because here, it's going to be pivotal what's going to happen here. Because if this downtrend is going to get invalidated, we're going to have strong reversal. But in fact, we have massive push down, and we have break in new extreme, two-legged pullback, new low, first entry short, second entry short. And now we have a lower high confirmation of the second entry short, and it is a little breakout pullback pattern of this key level right here. We went into consolidation a little bit, so this is great lower high confirmation setup of the second entry short. Great signal bar, take one tick higher, close back below EMA. One of the best setups today, because today was very slow and lackluster when it comes to setups. We're closing outside of the downtrend. We almost have a break, move to a new extreme. And as we can see, market keeps reversing and we are retracing too much of this downtrend. So if I'm going to zoom back, okay, the structure looked quite bearish throughout this area. So thinking about bearish downtrend made sense. But now that we see such a massive reversal back up, I'm going to adapt to brand new trend range consolidation structure, because it is just so all over the place, up and down, really difficult structure to trade because the downtrend is so weak. Yet you are in middle main trend range, so these broader channels are not as reliable. But I still like this lower high, even if you don't have the bigger downtrend, because uptrend played out, push below EMA, confirming the second entry short. Now I have to redraw a brand new uptrend, so I'm going to redraw the channel. I'm going to take a look at the start of the move, which is the place where we always want to look at the beginning of the move. We want to connect the first two swings. So I have one swing, second swing. I'm going to copy it, put at the top. EMA is pointing up. Okay, I actually had it a little bit tighter because this first entry short, first entry long confirming. You can see nice third swing confirmation. So what am I thinking about? Okay, I'm going to redraw the downtrend working lower because I need to respect the correction. I was thinking about new high, first entry long, pullback, second entry long, also would be triple test. But we had first entry long generated significant push phase. Now we're breaking the trend line, so we need to get new high following the trend line rule. I was thinking about taking a second entry long. Now it is getting quite stacked. As you can see, the bars are crammed next to each other, but we need to get new high. EMA kept holding. However, there was no trigger, no break above this bar high, so no second entry long. Then I was considering buying the bottom here, triple test, but once again, we broke below, no signal bar formed, so I have to be careful. I cannot really go long because there's simply no signal bar, no setup. And market is breaking higher. Okay, now had this high low triggered, I would have liked going long here, confirming the second entry long, the fact that we need to get new high. But as you can see, this signal bar didn't get a break above its high. And now we have new low, first entry short, pullback, second entry short, failure if there's going to be a break above this bar right here. This uptrend is new high. I have a small break, new extreme, and I have first entry short, second entry short, failure. It is slightly more aggressive because you can see it was closing quite bearish. So you're still above EMA, but of course you like to see stronger bullish bar. But this is a decent setup. Fell second entry short because the uptrend to the left still needs to get new high. Fell second entry short, barely closing above EMA. Decent high probability setup. You can use deeper limit order because let's say you're gonna wait for the trigger here and drop it somewhere around here, close to the body, and your stop loss goes one tick below the single bar. And market keeps working higher. Now we have a break, move to a new extreme, and notice break a new high gets us to the important key level high of the day. So if I'm gonna zoom back, this important key level, the high of the day, is coming into play again. So you don't want to sell just yet because this was quite bullish. But if this key level is going to hold and we're going to get reversal pattern below the EMA, you can trust it because this is a big trend range and smart sellers will sell at the top of this key level. Okay, now we have a second entry short, but it is simply too bullish. You just don't know. You can't really predict what if there's going to be that one more push higher. Once again, I know some traders like these, picking tops, because you have to remember all uptrends played out and you're at the resistance, so it makes sense to think about selling. A lot of these bulls buying the second entry long after all uptrends played out, they're gonna get trapped. But it is way more advanced. I prefer to be waiting for the push below EMA and can get some confirmation. Market keeps trending lower and now it's getting pretty much way too late. And there's a spike and a channel pattern. Today was quite slow and boring because we didn't really get that many setups, though it looked very promising at the very beginning. I was really thinking we're gonna get the retest, but you need to trade the market you get, not the market you want. And this was pivotal because here you expect definitely to get a lower high below EMA. The fact that you push back above EMA, that is not what is supposed to happen after the two-legged pullback. So the explanation is the overshoot is allowing market to reverse higher, and once you can see the significant push up, you have to widen the uptrend, you have to expect the reversal, you trade the market you get. And then we had a two-legged pullback, which was a horrible bar, so you cannot enter. And once again, you want to see the high low confirmation above EMA. You can't really buy below EMA because you simply don't know if there's going to be one little push lower and then it's going to go higher. So price action was quite predictable here, but not that many good setups. Couple decent setups off of these highs. This was a really tempting potential double trap because uptrend played out. Now you have overshoot that has a break at a new high. Had it closed below EMA would have been really great. I'm gonna mark it more aggressive. Had it closed below EMA would have been red high probability setup. And once again, this failed breakout would be normally okay if all of these bars lows are a little bit higher, because this downtrend still needs to get new extreme tested. The fact that you already tested it here with the double bottom tells you, hold on, what is going to be a stronger pullback to the upside. So not the greatest opportunity for sell. Great lower high confirmation setup, and well, second entry short to finish the day. Yeah, not that many setups. You have to be very patient. This is the type of day that you can get really frustrated, but it is part of trading. Not every single day is going to be easy day, and you need to have a good foundation as a trader. It is about having the right skills and the right mindset that will pretty much produce the money later. So, which means you have to resist the urge to take a trade every single day, because remember, you want to know what is the context, you want to trust your key entry point, and the setup needs to form correctly. Sometimes traders, when the market is this low and mundane, they try to make the case better for the setup because they feel like they have to trade the day, they have to make a setup, but that is not the state of mindset you're supposed to be in. You always have to be objective and honest, and if you're not sure what is the exact bias, if the key entry point is not fully confirmed, you just cannot pull the trigger, because we're not pattern traders. You have to understand what is happening in the market. A pattern that is just the last confirmation of your chart reading skills. So I hope it makes sense. Slow day, but it's normal. That's part of trading. There are going to be good days again. Either way, I hope you had a great trading day, and I'm going to wrap it up. Good luck at your trading.